Pranay, I am delighted to know that this year the total amount of microfinance through various methods, including through self-help groups, through MFIs, through MFI NBFCs, through normal NBFCs, and through banks, both regular banks and small finance banks. I believe it's crossed 6 trillion rupees. That is quite amazing, and it's reached about 6.5 crore distinct borrowers. So it's very creditable that this is the outreach of the sector. At the same time, there is also, particularly for the last 6-8 months, there has been a fairly alarming rise in the NPAs. There has been a downturn in repayment, and part of it had to do with the sort of excessive leveraging or over lending that was done over the last 3 years. Of course, after COVID, everybody needed some capital, and I think that momentum probably went on beyond what was necessary. So, in the last 2 or 3 months, I have been called to several microfinance events, and indeed by other people who are MSME experts, to identify what are the issues and is this a cyclical problem all the time, how to get over it. So, I personally feel that it is, for all its great achievements, the microfinance sector is stuck on a single product. It's basically a EMI based product. At one time it used to be equated weekly installment, it became equated monthly installments. And supposing, say, the average loan size is, say, 50 or 60,000 rupees, in a 1-year EMI, the loan comes down, the amount outstanding comes down to less than 25,000 rupees. Exactly when working capital is required to grow the business, actually the loan goes down. And therefore, there's a tendency to borrow from somebody else, and then a third one, and so forth.
One of the major problems in the microfinance sector is that we provide loans which have fixed EMI. So basically, an entrepreneur who is wanting to start up, grow their business with an increasingly higher growth rate, they do not have any kind of risk capital which can, whose repayment is linked to the cash flows of the business, the profits of the business. So what happens is that because of this fixed EMI repayment from day one, a person who is starting a business has to squeeze the capital out of the business when the business requires that capital the most. Or they have to go for other means, they have to borrow from somewhere else to pay off this fixed EMI, which really hinders their entrepreneurial capability. So it just not affects the business, but also the entrepreneurial motivation of the person. I think microfinance is designed for consumption activities and livelihood activities which have a constant monthly fixed income. An entrepreneur who has to put in his or her own capital during the initial stage, and there is a long cold startup stage which can span over months. That's when the business requires huge amount of capital, which we refer to as a startup stage, and then once they hit the S-curve, they have achieved the product market fit. That's when business typically absorbs huge amount of working capital. Now, that is the time.
Let's not use the word huge because we are talking about microloans.
Okay.
But what you mean, I think, is capital which is not ready to be repaid yet.
Correct. Patient capital, risk capital.
Yeah, so see, there are, if we break down the life cycle of an enterprise, an MSME, into at least three parts. One is the startup stage till it reaches break even, and many of them die before that.
Correct.
Then once it reaches break even and becomes stabilized, then it needs to grow.
True.
And third, in the life of every enterprise, there are some shocks or the other.
True.
You know, due to various reasons. Sometimes it is due to the proprietor's life cycle issues. Sometimes it is due to the, the enterprise life cycle issues. So in all these three stages, you need capital which does not require instant repayment or fixed repayment. At that time, you need flexibility. Now, that is the kind of product which is completely missing from this standard EMI loans.
Flexible finance.
Yeah. Now, one can say if you make it that flexible, then how will you ever know when to take the money back? To which your and my answer, based on our experience, the pilot project that we've been running for the last 3 years quite successfully, is that we should link repayment strictly to cash flow.
True.
Right? And a certain surplus of the cash flow, small percentage, maybe 3, 5, usually a single digit percentage of the total gross cash flow goes towards the repayment of the loan. So if in certain periods the cash flow is low or even negative, then there is no repayment, and it's a very legitimate reason. So then immediately the question arises, how would you know whether the cash flow is real or whether it's being fudged? Right? So there you have tried a number of solutions. Why don't you tell us about that?
So till 5 years back, possibly what you are saying was not possible because it was very difficult to keep a tab over the cash flows of the business. But in the last 5 years, with all the digitization happening and majority of the payments happening through UPI and wallets and POS terminals, it is extremely easy, and now it has become possible to keep a track over at least the sales of the business. And with well-established benchmarks for each and every kind of business, it is now possible to come up with approximate profitability of a business on an ongoing basis. And therefore, we know what is happening in the business and how much cash flow can be drawn out of the business without affecting the growth of the business. So what was not possible till 5-10 years back is now possible because of digitization, and this product can come to life, and that too at a large scale. Sir,
so I am in fact saying that let us recognize that there is possibility of fudging. So initially we restrict it in 2-3 ways. First is we only deal with slightly larger than micro enterprises, preferably entities which are registered under the Udyam portal and which also have a GST registration. Okay, which means you're already dealing with people whose annual turnover may be more than 40 lakhs.
20 to 40 lakhs.
Yeah. 20 to 40 lakhs, and they therefore may be using fixed and working capital in the range of 5 lakhs.
True.
Right? Because there's maybe fixed capital of 2 lakhs and 3-4 lakhs working capital.
5 to 15 lakhs is the
right. So I'm saying let's start with them. So because they have GST registered and because input credit is required, so the chances of fudging are much lower. Second, we are anyway dealing through a single bank account which is digital, and that bank account is being monitored. Then typically there's always a critical input for any enterprise. For example, say if you're talking of a welding repair shop, there are two critical inputs. One is the welding rods, how much is used, and the second is electricity consumption, or gas in case it's gas welding. If these two are monitored, then the chances of fudging are, and similarly in every enterprise, there is something.
Yep.
There's a story about the proprietor of Haldiram, 85-year-old gentleman, and he was asked by a McKinsey partner, so how do you monitor? He says, "Bhai, hum to ये देखते हैं कि नमक की खपत कितनी है। ठीक है, सिर्फ नमक, ओनली सॉल्ट। हाँ, क्योंकि अगर जितनी होनी चाहिए उससे कम है, इसका मतलब कुछ स्वाद में बदमाशी है, और अगर उससे ज़्यादा है तो इसका मतलब कुछ माल बन गया जो हमारे रिकॉर्ड में नहीं आ रहा है, इधर से बिक रहा है। तो हम नमक के ऊपर ध्यान देते हैं। सो यू नो, सच ए ब्रिलियंट, सो दिस काइंड ऑफ monitoring is possible, and with that I think the cash flow based and we can now with you know ACH and all that, in ACH it's possible to do a literally a nightly sweep, you know, हर रात को 9 बजे आपका जो कैश फ्लो है,
daily collection is
certain
possible.
percentage goes to you, and let us say for 3 days or 5 days nothing comes, then there is a phone call, then there is a visit, you know, all of that is still there. I'm not talking about 100% digital, I'm talking about DigiTouch, you know, where, and to enable DigiTouch, we work only in clusters, you know, so that you don't have to go all over the country, you know, and the clusters typically are broadly in the same products. There are handloom clusters, there are brassware clusters, there are, you know, clusters of various kinds, you know. So you also get an in-depth sectoral understanding, you know, and you get very standard parameters for operation. So tell us a bit about your experience of the product so far.
Yes, sir. So when we started out 3 years back, we were clear that such a product is required, and so question was that what kind of instrument should we come out with? Initially, we tried and failed with pure equity kind of investment, wherein we wanted to do the valuation and take a stake, and it literally fell off.
वो तो हो नहीं सकता ना, बहुत छोटे हैं।
Then what we did was we sat with multiple entrepreneurs, and with your guidance, we came up with a very simple instrument, which was you know, percentage of profit share on a monthly basis by the entrepreneurs. So the repayment was linked to the performance of the business. If the business is doing well, the entrepreneur would end up paying us more. But if the business is not doing good, especially in the startup stage and the high growth stage, when the cash flows are not strong.
So which are the kind of businesses you've, give us an example, what is there?
So these have been primarily non-farm businesses, but we have also found this to be applicable in farm businesses. In the non-farm businesses, we did, say for example, cooler manufacturing business. We did...
how much was the loan?
It was 5 lakh rupees
5 lakh.
of financing, and a portfolio was spread across multiple industries. And what we have seen is that even if individually their cash flows are fluctuating and their repayments are fluctuating, but at the portfolio level, consistently for the last 3 years, we have been seeing a net IRR of 12%, something unprecedented. This has not been established or found anywhere else in the world. So this is something that has started being successful recently because of all the tools and digitization that we have and the examples which you gave. And because of this consistent yield at the portfolio level, it's a product which can be taken up by financial institutions, because the moment it's consistent, it can be rated, and at a scale when it can be rated, it can be sold, securitized.
So we have to be careful. I have spoken to some very senior bankers about this product. And you know, one of the things that we have to work with, and we have to go and have a conversation with the RBI, see, the present manner in which a loan is declared performing or non-performing is based on a repayment schedule. Now, if you're talking of a cash flow based repayment schedule, then the only thing that is predictable is the percentage. But whether the cash flow will be positive or adequate or negative is not predictable. And that's the beauty of the product. But then the manner in which a loan is declared NPA also needs to be changed. Now that requires a regulatory review for this type of loans. And since the RBI has set up a whole innovation hub, initially maybe it can be done as an innovative product. Some small 100 crore or something like that can be tested out so that the sample size is adequate. And if it is proven to be fine, then it can be mainstreamed.
True.
Because see, right now also to step away from enterprise level to a macroeconomic level, as you know, the nation is seriously in need of employment, and we need to upgrade our manufacturing sector.
True.
The MSME sector badly needs to grow. The present system of loans, whether they are mudra loans or microfinance loans, where there is a fixed repayment schedule, is not appropriate, because either at the startup stage or at the growth stage or at shock recovery stage, you need capital which is not to be repaid for some time.
Exactly.
And if at that stage you say, nahi, abhi due hai, pay karo, nahi to NPA ho jayega, then they may pay, but they will go and borrow from some informal source.
True.
And then it creates a structural problem that in the first place we're trying to sort out. So I think the next step is for us to work with a large bank, maybe the SBI or maybe with the support of SIDBI, and also work with the regulators and explain to them why such a product experimentation is necessary and why it would open the door for a new growth phase in our MSME sector.
Another insight. So in the farm sector, we will find that there is dearth of businesses at the pre-processing level, primary processing level, and secondary processing level at the farmer entrepreneur level. All we find is these large enterprises who act as aggregators only, nothing at the farmer entrepreneur level. Now, when you go deep, you find that there is really nobody to provide them with patient risk capital, because there has to be somebody who provides them this equity-like capital for buying the machinery at the initial stage and also the working capital. Because of this lack of risk capital financing, we will find that there is missing layer in our village and block level, probably we refer to as missing middle.
Yeah. Right. So, we both among farmers, there are certain large entrepreneurial farmers who are willing to take commercial risks, but they need some cushion of risk capital, or at least patient capital, even if it's not equity. Similarly, among MSMEs, there are lots of micro enterprises. In fact, as per the annual survey of unincorporated enterprises, there are roughly 6.7 crore of them. Of that, about 1 crore are what are called HWEs, hired worker enterprises. Rest are all OAEs, own account enterprises. That is, they have either the family, self and the family member, nobody else. But we have close to 1 crore HWEs. Out of that 1 crore, at least there are 25 lakh which have 8 or 10 workers. So initially we can start with that, and this product can be tried for them.
True. Absolutely.
Great. Thank you.
Thank you, sir.